Hey everybody, my name is Brandon from StockSense.com, and today I want to talk about Shopify stock, ticker symbol SHOP, and how it is down about 50% in 6 months. So now let's get started. So here we are in Google, and here's a 6-month view of Shopify stock charts here, and we can see what a rough 6 months it has been for the name, off about 50% in 6 months time. And if we look at the 1 month view, the story has not gotten much better. We are only down about 30% in that 1 month time. And if we look at the 1 day view, this is actually something I want to pay more attention to, because today, the 16th of February, is the day that Shopify reported earnings. Obviously, today's reaction is due to the earnings report, and that's why we are down over 16% today, and we will get to that in a moment. But what I want to do first is talk about the macro picture of Shopify. I want to talk about what the market is thinking of Shopify, and to do that, I want to actually focus on some numbers reported by Google down here. I want to focus on the market cap as well as the price to earnings ratio here. We can see that the market capitalization of Shopify is about $91.5 billion here, and Google reports a price to earnings ratio of about 27. If you consider Shopify a growth stock, then honestly, a 27 PE ratio is not too bad. In growth stock land, that actually might be considered cheap. But the question is, should you consider Shopify a growth stock or not? If we take a look down here at the news, we can see that the reason why investors are bailing out of Shopify is because of perceived sales slowdowns and massive spending on fulfillment networks. And those are definitely concerns that we will talk about in the next section of the video here. But in this section of the video, I want to talk about the sentiment. News stories like these with negative sentiment is obviously bad for the stock. However, the bad sentiment now resets expectations, and this is a good thing for people who want to get into the name or for people who want to expand their positions in the name. By resetting expectations, this increases the likelihood that Shopify can surprise to the upside because the bar has now been basically lowered to the ground. Just like anything in life, it is much easier to beat expectations if you set the bar low, and if Shopify is able to beat on expectations, then it is likely that the stock will be rewarded. However, the risk that investors need to consider is that if Shopify is unable to beat those expectations, if Shopify is unable to beat those low expectations, I do not think that we will see a down day as drastic as the one that we did today, but it still will probably not be pleasant. So after talking about how companies sometimes use this purposeful lowering of the bar, giving bad guidance, is oftentimes called sandbagging. So after talking about how companies sometimes use sandbagging techniques to lower guidance in hopes that the company is able to reset expectations and have upside surprise in future quarters, now let's head on over to Shopify's earnings report to see if Shopify's quarter was as bad as people say. So here we are in Shopify's earnings report for the fourth quarter of 2021, which is shown in this column over here. And we can see that is compared to a year-over-year view with the fourth quarter of 2020 shown in this column over here. So first things first, we can look at the top line revenues here, which is this line on the earnings report. And we can see that year-over-year top line revenues were actually growing pretty nicely. They are growing about 40 to 50% year on year for the quarter, and that to me is not too shabby at all. Moving on here, we can look at the costs of revenues here, which is this block on the earnings report, and we can see that the cost of revenues for the quarter over quarter was again rising about 50% as well. So even though both our revenues and our costs are increasing about 50% each, we're actually able to increase our gross profit here year on year from 2020 to 2021 by about 30 to 40%. Still, to me, this is looking quite alright. A 30 to 40% growth as the gross profit is definitely nothing to sneeze at, and that's definitely a good thing. However, as we now move on to the operating expenses block on the earnings report, this is where we get to the part where some investors are getting a little bit concerned. We can see here that each of these expenses, sales and marketing, research and development, general administrative, and transaction and loan losses, all of those expenses are absolutely exploding year on year compared to 2020. This increase in spending is what you are paying for as an investor, and this is something that investors need to always keep in mind. As I've said before, investors want a return on investment, and all of this spending is definitely not contributing to a return on investment. And obviously, all of these expenses are carrying down into the income from operations here, which is only about $14 million for the quarter, whereas last quarter in 2020, we were able to yield about $112 million. Obviously, if we are impacting our income from operations by almost tenfold to the downside, we will see an impact on the net loss here. And we can see that for this quarter, the fourth quarter of 2021, we can see that we actually reported a net loss of about $370 million for the quarter compared to a $123 million gain from the same quarter of last year. That is a massive spread. But again, let's take a deep breath here. When we look at a company, we always have to look at different time points. And if we look at the full year numbers here for 2021 versus 2020, we actually see a little bit of a better story. We can see that income from operations here, full year over full year, is growing nicely, even though the quarter over quarter view showed a huge decrease in income from operations. If we look at the year over year view, we can see that we are almost tripling our income from operations full year over full year. The same story is told again in the net income here. We can see in the full year of 2020, we were only able to yield about $300 million. But in the full year of 2021, we are closing in on $3 billion. This is why looking at the same company on different timescales is incredibly important, because the full year over full year view looks quite good, while the quarter views here look quite terrible. But again, as investors, we always need to be cautious. Investors could make a case, and a really good case at that Shopify reporting these massive net losses and these massive spending and operating expenses for this quarter, it could be a sign that Shopify will continue to open up the faucet and let money flow out of the company at the expense of shareholders in hopes to buy growth. Investors might also make the case that revenues may slow due to a reopening economy. As always, the decision is up to you. But for me, when I think of Shopify, I actually like the macro tailwinds for the company. I think that e-commerce is still a good trend that will grow in the future, and that Shopify is in a real good position because of its name recognition and because of the pools of data that it has already collected from its customers from years of operation. So after talking about how Shopify shows poor year-over-year quarterly results, largely because of the massive operating expenses, but decent year-over-year full year results, now let's head on over to the trading charts to see if there's a level or two to buy Shopify if we want to buy Shopify. So here we are on Shopify's trading charts, and what a massive fall we have been through since our highs back here in late November. If we scroll back at the charts here, going all the way back to the crash of 2020, we can see that we are actually right at a decently strong support level, around the $720 to $750 support level. I think that if somebody did want to open up a position or add to their position in Shopify, that this is probably a decent level to get in. However, this is the first day of a major sell-off. I would sit back for a day or two, let things shake out and let the dust settle, and if Shopify is still able to hold the $720 to $750 support level, then I would be taking a hard look at the stock, because again, I like the macro fundamentals and I understand the risk that management may be spending piles of cash in operating expenses for quarters to come. But because I have a long time horizon, I don't really care about what happens to Shopify next quarter or the quarter after. I care about what happens to Shopify 2 years from now, 5 years from now. That being said, if this $720 to $750 support level does break, then maybe there are some large macro pressures such as geopolitical conflict or interest rates, then I think we could fall back down to this level over here around the $620 to $630 level, and if we even get some more bad news, then we could fall back down again to pre-pandemic highs around the 500 to 530 support levels. I honestly think that the probability of seeing 500 or 630 again is pretty low. However, the probability is definitely not zero with all of the volatility in the markets at the moment. So with all that said, just quickly zooming back in here so that we can take a look at the MACD and RSI, we can see that the MACD seems to be rolling over. The short-term momentum blue line here looks like it wants to cross under this orange line here, which is the long-term momentum. And that would definitely be a bearish sign, which could indicate more downside to come. At the RSI charts over here, we can see that our RSI line is just about to touch the oversold territory. And if that happens, to me, that's actually a good thing. And this would actually start sending me signals to see if I want to add this name to my portfolio. Because again, I always like to buy things on discount, and that is what the RSI oversold territory signals to me. So that was my review on Shopify stock. Let me know what you thought about it in the comment section down below. If you have any questions or if you got any mistakes, also drop me a comment down below. If you liked the video, please like the video. If you haven't subscribed yet, please subscribe. And as always, thanks for watching and I hope you have a great day.